this is the 401 work together. As you see in here in your instructions, it'll tell you to take these numbers that they give you, and we're going to use these as our adjusting, helping us make our adjusting entries. Tells you you have a completed trial balance, partially completed, so we'll have to put these numbers into the trial balance. We'll have to make some adjustments and finish the trial balance. We'll add up some columns. Then we have to post, obviously, but then we'll add up our columns, figure out what our income is before federal income tax, do that times the tax rate to get our adjustment, the final adjustment, which is the federal income tax expense adjustment. We'll figure that out, figure out what we owe because we pay our income tax, we estimate pay ahead, so we got to figure out what the difference is to complete this all. I'm not going to have this up right now. I'll go back and forth with it. I took a screenshot of it because otherwise it covers up part of the journal. So the screenshot's right here. So we can move it around a little bit so you can always see it when we punch numbers in. All right, so first things first, we're going to be doing adjusting entries. So we have the heading that you'll have to put in, and we'll get started by putting in adjusting entries here. And it'll come up, yep, you'll be able to choose. And we're using the date, December 31st, as our date. That is the end of our fiscal period that we are doing this assignment for, okay? So the first one we do, is uncollectible accounts. So they have an estimate here of $2,102.23. All right, 2,122, 201. 23. So down here, they have it open for you. They have all this ledger numbers that we need to use. So the first one says is 7738. All right, so that's the balance of allowance for uncollectible accounts. The number they give us is this is what we have carried over so far throughout the year. This is remember what this is. This is a number that we don't think we can collect. We officially say the number at the end of the year should be this number. So how do we get to that? We have to subtract. I'll show you. So we estimate the number, or the number that we finally figure out to be what we estimate we're not going to be able to collect, is 2,102.23. The balance in the general ledger that we already say we can't collect is that. That's included in that. So we need to add, to get to 2,101.23, we already have 7738 in. This is our adjustment. Okay, and we debit uncollectible accounts. So go up there, and we will debit spell it right, uncollectible accounts, and we will credit allowance for uncollectible accounts. And we will put the number 202385. And that is the number. Again, how do we get to that? We have instructions say this is the number we want to be our total. We already have 7738 in there, so we need to subtract it to get what the amount is that we need to adjust so that we can get to this amount. We have this, we want this. How do we get that? We got to add. So then we have to make that adjustment. So that's the first one. The second adjusting entry is the merchandise inventory one. So again, it's the 31st. So now we go down. We'll post these later. We go down to merchandise inventory kitchen. We have 140,890 that we have at here. That is telling us that that's like our beginning, what we thought we were going to have, what we started with. We end up with 147,084.62. So again, this balance given in instructions is the end of the year. This is the amount we started with. So the adjustment is it has grown. The inventory for kitchen has grown $6,194.62. How do we increase merchandise inventory? We must debit it. And we credit income summary. Remember, income summary is kind of like a dumping ground. So the number given in instructions is the ending, for lack of a better way. This is what we had at the beginning. We make all these purchases and sales throughout the year, and we ended up with 147 left. I started with that, so we increase. So we need to make an adjusting entry to show that increase. So we need to debit merchandise inventory kitchen, and then we need to credit income summary kitchen. And we do that for the 6,194.62. 6194.62. Okay. The next transaction, ending merchandise inventory for Bath. So again, this is like that when we periodic counted all our stuff up. So on the 31st, we had that much amount. So you go down to your, again, go down to your ledger, go to your Bath. We said at the beginning we had 98,620. So the difference is balance in the instructions, the amount we have a less amount. And it's not a negative or positive in essence of we're doing well or bad or good. You might have, just wanted to bulk up because you're going to have a New Year's Eve sale, whatever, it doesn't matter. But it's just the numbers. We ended with this, we started with that, so our adjustment needs to be that we need to lower or make our inventory for Bath smaller. So if we have to make it lower, then merchandise inventory needs to be decreased and we need to credit it. So here we made merchandise inventory, the first one we made merchandise inventory kitchen greater, so we debited it. Here we're making merchandise inventory Bath smaller, so we must credit it. 948.69, 948.69. And again, it's not bad or good. It's just we gained, by the end of the year, we had $6,194.62 worth of more inventory than we started with. And at the end with Bath, we had $948.69 less. That's all it is. We can kind of get this Word document ready for the next one. Okay. The next one, supplies on hand. All right, so we got supplies expense. When we're dealing with the supplies expense, it says we had 1,950. So we go down. It's not let me. I hope it didn't lock up. Okay. We go to supplies, and it says we had 6,097.89. So the on-hand value is the one given to us in our direction. What we have right now, we started out with 6,097.89, so we are less. We have 4,147 less. How do we make an asset less? We must credit it, and we debit the expense. So that's what that's saying. So this is how you do the supplies. So we go on up to the 31st again, and we do supplies expense, and we will credit supplies, and we will do that for that amount, 4,147.89. Okay. Next transaction is very similar. Value of prepaid insurance says what we have left at the end of this fiscal period is $2,500. Go down to here. Prepaid insurance says we started with $18,000. So if we wanted to show what that looked like, the value of prepaid insurance was at now that we know of is $2,500. So that's what we have. Start out with 18. The difference is the adjustment. Since it's smaller, we need to credit the asset to make it lower, and we'll debit the expense. So we'll go up here, and we will do insurance expense, and we will credit the asset prepaid insurance for that amount. And we said it was $15,500. $15,500. Okay, next one are the two depreciations. We have office and store. So we have the 31st. And what number we're looking at is it says 7,250. That is the adjustment. They're giving it to us. Depreciation, I think office was first. depreciation, depreciation expenses first, accumulated depreciation office. And it's for that number, 7,250. So they give it to us. We debit the expense and credit accumulated depreciation. We do the same for store. Store, depreciation store. The amount they have is 8,490. We do 8,490. The last one is going to be federal income tax expense. So we can put the date or whatever, but we don't know this one yet. Okay. So what you do in our instructions, it tells us record the adjusting entries, and then we post all these. To save time, I'm not going to post all these and go through posting. You know how to do that. And in fact, maybe for this work together, you won't even have to, because we're going to give you so many numbers and we can kind of just, it's practice. The application problem we will ask you, but for the work together, you don't have to. But for saving time, we're not going to post and show you how to post these. Obviously, you go down and post every single one of those. It says enter the adjusted account balances on the trial balance. Okay, so I got to close this. So in reality, in the application problem, you would post all these, because then in these ledgers, you would get the amounts. And then you would fill in the blanks here. Okay, and so this is the unadjusted trial balance. Or the adjusted, trial balance. All right, so what do we have? Where do you get all these? You get them from the general ledger. Okay. They don't give us all the accounts in the general ledger, right? They only give us the ones we're using when we're doing our adjustments. So these are all the adjusting entry accounts. So they give you a lot of these, and then you have to fill in the blanks, right? So allowance for uncollectible accounts. That is the number, if you remember, from our document, the estimate was that amount. The adjustment is the 2023. Well, we need, when you post it, the allowance will be that amount. Okay, the allowance will be that amount, 2,123. Now, when you go to later on down here, when you're looking through it all, the uncollectible accounts expense, 2023.85. That is going to be from that number, because we have in our ledger, if you would have posted it, that would be the numbers that are going in here, because 7723, you're taking the ending balance numbers. We estimated, or this is how much we thought we had. Remember, this is what we're supposed to have, as we think is going to be uncollectible, so we need to make the adjustment. So those two numbers in your trial balance, you're just going to go through basically and take all of your balances and put them into the trial balance. But instead of posting and showing all that, I'm just going to show you these numbers. So these are going to be the numbers that are going to be given. And a lot of these, because we had nothing in there, a lot of them will be because the posting is blank. So like merchandise, inventory, kitchen. We're going to end up adding that money, putting it in there, and then we'll get the balance, and we'll put it in here. So these are going to all be left blank, and then we're just going to go ahead and put the numbers in. Some of them are the exact same as over here, but basically just post your adjusting entries, take your balances, and put them in. So I'm leaving them up for you to kind of see. I'll scroll down a little bit, and you'll put all these numbers in. Notice that we keep federal income tax payable number blank. We don't know that number yet. So then you put in these numbers in again, all the way down. But we don't know federal income tax expense. That is going to be the last one. I've already put it in there, sorry. You can too, I guess. But we're putting all these numbers in from the balances from the adjusting entries. We need to figure out next is federal income tax and totals. So when we look at these instructions, it tells us first record the adjusting entries, then to post them, then enter the adjusted account balances after we post to the trial balance, adjusted trial balance, which we did there. Now we need to calculate federal income tax rate. Prepare and post the adjusting entry for it. All right, so how do we do that? Very simply, if you remember from our worksheet, we used to add up the income statement credit column, subtract it from the income statement debit column, and the difference is our federal income tax. We put it in the chart. Well, we don't have income statement columns, so if you remember, the income statement columns start after dividends payable. So starting with capital stock on down, okay, that is where we will begin. So you add up, or not dividends payable, excuse me, I lied, sorry. From dividends down. So anything from dividends up, balance sheet accounts, and then from dividends below dividends is income statement account. So dividends was our ending balance sheet account. So we don't have anything in general, even though it's listed, that's fine. So you'll add up these credit amounts. Why? Because they're the income statement account. We only have one thing. We're not doing a huge 5-page, 5-column, 10-column, 8-column worksheet. So these are all balance sheet accounts. So once you get to dividends, everything below this is income statement. So you add these numbers up, you get a total, then you add up all the column for debits, and what you end up with here we go. And what you end up with is the income statement credit column of $756,246.40 and an income statement credit of $678,307.71. Subtract them, and that is the net income for federal income tax. Again, all these numbers in the credit, and then add up all the numbers in the debit. You take those two, write them down, subtract them. That is the number then that you would put here. So when you get done adding up the column, and again, you might have to get some scratch paper and write it down. But that 77,938.69 is the number. The tax rate is 21%. And the federal income tax then, when multiplying that, is $16,367.12. Okay? So now, this is our adjustment, so to speak. Okay? But we have to go look first, right? Because what we did is we've been paying tax quarterly as an estimate. We kind of know how much money we're going to make. We kind of know all the ins and outs. So what we paid is $14,000. So what you see is this is the federal income tax number, and this is what we'll write in the debit column of the adjusted trial balance. I guess I didn't do that. Yeah. So that's the number we will write I gotta move up way down here. We'll write 16,367.12. Excuse me. Okay, that's the number. But we need to do the adjustment. All right, that's the number. You take a look in the general ledger. You see the federal income tax ledger. You have $14,000. That's the amount you've already paid quarterly. So you take the amount you owe, which we found, minus what we've already paid, the $14,000 we estimated we paid quarterly to pay, and this is our federal income tax adjustment, $2,367.12. So when we get to our adjusting entries, we will do the federal income tax expense, and we do $2,367.12, and we credit federal income tax payable. And again, where did we get that? The number we found from adding up our debits and credit columns. Subtract you take credit minus the debit, get a number, put it through the tax percentage. That is our adjustment. We put in the adjustment in our adjusted trial balance, but we don't adjust that total because we've already paid $14,000. And what we want to do is know we're supposed to pay this much. We paid this much. What do we have to do? We have to adjustment. We have to do that $2,367 adjustment. Then we will post that into your ledgers. Okay. And then hopefully you have written these numbers down. Remember when we added up the column, income statement credit column, income statement debit column? Hopefully you wrote those numbers down. Because when you go through this, and what you'll find is when you do the adjustment, you post those. We need to put these into our adjusted trial balance. So I'm not showing you the posting because it goes a lot quicker not doing that. 2, 3, 6, 7, 12 is the number we have there from our posting and taking the balance. This is the number we have here. So now we add those numbers to what we already had totaled, because we added them up prior. You have half of them added up. You got dividends on down. So you add them all up, and I'll probably give you these totals so that it's not so hard later on. Or at least you hopefully will be able to tell if you got them right. And you end up with $1,095,521.21. Okay. Looking at our directions, we were able to do the adjustments. Depreciation are just the regular adjustments, and you got to kind of calculate a few things here and there, subtracting and adding. Then you would post them. We didn't show you that, but you would post these accounts. We would enter them into the partially completed adjusted trial balance, which we threw them in there. Now we had a couple blanks. We had the federal income tax payable and federal income tax expense blank. We had to figure that out. So we added up all the numbers below dividends, which is income summary on down, and the credit and debit, found a number, multiplied it by the 21% tax, and we found our federal income tax number. We had to take it from off the estimate, make our adjustment, post those, and complete the adjusted trial balance. So that's a lot of work for doing that one problem. Again, we can skip posting for this. And then we need to do the journal for the adjusting entry. I can't remember what that number was. Number 20. I'm going to give you this sheet too, so that you have it. That will help you figure out the work together a little bit too. Thanks.